Broadcom reported their latest quarterly figures last week. Was a pretty good quarter, yet the stock was down 10% or so. So is it a good opportunity to jump in on Broadcom right now? What exactly has happened? Let's discuss all of that in this video. Now, first of all, I'll be back, maybe a bit slower than expected. I've been having a fever for the last couple of days, so hopefully things will get better in the coming days. Thank you everyone for all the comments, messages. I really appreciate all the support. If you're new here, hit all the buttons, like, comment, subscribe, do all of that. Would really appreciate that. And if you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So, Broadcom went down 10.3% on Friday at the time of making this video. Pre-market, it's now up 1%. That's on Monday. Has a market cap of $637.7 billion. Yes, it's one of the largest companies on this planet. It currently has a forward PE of 23.2 times and has a dividend yield of 1.55%. So, right now, year-to-date stock is still up 23.6%. So, okay performance, right? If you look at the last 5 years, I think it did quite well, up close to 450%. Now, this is a company that is not growing that slowly, right? If you are looking at fiscal year 2024, sales growth of 44%, of course, thanks to the acquisition of VMware. Then we see growth slowing down quite significantly, 17% year-over-year growth, and then followed by 12.13% year-over-year growth in fiscal year 2026. EPS, the opposite story. EPS is expected to grow 14.8% in fiscal year 2024, but then accelerating to 27.27% in fiscal year 2025, and then another 17.8% year-over-year growth in fiscal year 2026. Currently, the average analyst price target still sits 40% higher than the price we're at today, at $192. Now, if we look at some valuation metrics, so price to earnings, EV to EBITDA, price to sales, price to free cash flow, price earnings to growth, yes, it is now more expensive than its 5-year mean, but remember, now it also includes the acquisition of VMware. But if we look at price earnings to growth, sits at 1.2. I mean, that's not expensive, especially not if you know what Broadcom does. I did cover this company, I think, a month or so ago. It's one of the most powerful companies on the planet, yet it's very much under the radar, unless you're an investor, of course. Broadcom is also known for its acquisitions. It did acquire other companies along the years, and most of these acquisitions, if not all, have been quite successful, especially the integration. Now, VMware is another monster. It was a huge acquisition, so it will take time, but so far, I think the integration has been quite well, and to be honest, maybe even ahead of times with the results. Now, okay, you might say that maybe they overpaid, maybe not. Okay, but when we've seen previous companies do acquisitions, especially large ones, most of them fail. I think Broadcom will do quite well here. So let's discuss what has happened in the last quarter. Net revenue has increased 47%. Of course, you have to include the acquisition of VMware. Net income is a loss of $1.8 billion, and so is the earnings loss here. This is on a GAAP basis, 40 cents loss. Non-GAAP, they're all positive. Cash flow from operation is up $244 million year over year. Adjusted EBITDA is up $2.42 billion, and free cash flow is up $194 million. If we look at the different segments, so there's the semiconductor solutions segment and the infrastructure software. Of course, VMware comes into that, and you can see the big difference here. Previously, 78% was semiconductor solutions and 22% infrastructure software. Now, infrastructure software has basically doubled, went from 22% to 44% of revenue, and semiconductor solutions went from 78% to 56%. And so you're basically seeing something like this. The orange is obviously thanks to the acquisition of VMware, and the blue line might be the reason why the stock is not moving much, and that's the semiconductor part. Now, there is a down cycle happening, so maybe we're at the bottom of the down cycle, and Broadcom is preparing itself for a huge upcycle that is expected to be longer than before. But as you can see, it's still their biggest segment, and their biggest segment has not really grown much in the last couple of years. They said the following: Broadcom's third quarter results reflect continued strength in our AI semiconductor solutions and VMware. We expect revenue from AI to be $12 billion for fiscal 2024, driven by Ethernet networking and custom accelerators for AI data centers. The transformation of VMware continues to progress very well. The integration of VMware is driving adjusted EBITDA margin to 64% of revenues as we exit fiscal year 2024. Now remember, the revenue from AI was first expected to be, I think, around $10 billion. Now it's $12 billion. Consolidated revenue grew 47% year over year, as we've seen before. And free cash flow, excluding restructuring and integration in the quarter, was $5.3 billion, up 14% year over year. Now, this was basically the major overview for the quarter and for guidance. So 3 misses here, one small one for the semiconductor solution revenue, a miss of 1.8%. Then free cash flow, a big miss there, 24.3%. And for the next quarter, revenue did miss by 1%. All the rest were beats. So I think it's a pretty strong report, especially because you're also dealing with the integration of a huge acquisition, a huge company that was VMware. Now, of course, now that we're talking about NVIDIA every other day, you might think, oh, how come these semiconductor solutions here don't grow as fast? Well, as we've seen with other players as well, it seems like NVIDIA GPUs are at the center of the attention and at the center of the purchasing list. But maybe custom silicon will have its chance to shine soon enough. So let's talk about what was mentioned in the earnings call. So Hock Tan, which is the CEO, no, not the Hacktua girl. So did I hear right to say at the beginning, maybe you meant that there is a trend towards ASIC or XPU from general purpose GPU? So this is what I meant right before. Everybody is purchasing GPUs right now, but they are expecting a shift towards XPU, well, maybe sooner rather than later. So the CEO here says, you're right, and you're correct in pointing out to me that, hey, I used to think, the CEO, he used to think that general purpose merchant silicon will win at the end of the day. Well, based on history of semiconductors, mostly so far, general purpose small merchant silicon tends to win. But, like the analyst, the CEO flipped his view. And I did that, by the way, last quarter, maybe even 6 months ago. But nonetheless, catching up is good. Of course, he's talking his book, but it's already a pretty positive thing that he admits that he was wrong before and thinks that, well, once all the hyperscalers, everybody is done investing in their GPUs, they're all going to want to switch to XPUs. He continues by saying that it will take time to get there, meaning to get to the point where a lot of the guys that are spending billions and billions on GPUs will start the switch. They will go in the direction totally into ASIC, or well, as they call it, XPUs, custom silicon. Meanwhile, there's still a market for enterprise, for merchant silicon. By the way, reading this transcript, it feels like you're reading something that was written in Chinese or something, because the English here is completely out of whack. Right now, what we do know with regards to XPUs, multi-generational strategic engagement, is that there are 3 customers. 2 of them in 2024 are in production. The newer one is ramping up towards production, but I think the market is still waiting to get more information on who those customers really are. I mean, I think we can figure out who those huge customers are, but the market does want to get maybe some confirmation of maybe what happens next, 25, 26, maybe a new customer as well, customer number 4. I think that's what the market is waiting for right now. And by the way, when talking about XPUs, it's basically this what you're seeing here on the picture. So the XPU is equipped with 2 compute units at the center, while high bandwidth memory, HBM, populates the left and right sides of the chip. This is, by the way, a pretty big chip. Now, by the way, when talking about GPUs, XPUs, custom silicon, that's not to say that once these big players will start to make orders for custom silicon, that they won't be buying GPUs. No, most of them will probably use custom silicon for in-house stuff. We've seen that already with the likes of Amazon, I think Meta, Google as well. So I expect to see more of that in the future. Now, with regards to the stock right now, it is at an interesting point. We've seen it rebound at the start of August above, just under that 200-day moving average, but it did jump above it right after. Right now, we were very, very close at the end of last week at around that 200-day moving average. It does seem like this week we're going to start just above it. So I always like to look at a stock that could maybe rebound at that 200-day moving average area. If it does, that's probably a good sign. Now, of course, there are still some macro events that can derail the stock market. We also know that September is not really a great month for stocks, so take all of that into consideration. Although we already had a rough start, so maybe the worst is behind us, maybe not, I don't know. But if you can buy a great company like Broadcom for better prices, cheaper prices, why not? It's definitely now on my watch list because I do think it's one of the strongest companies out there. And I do think that once we enter the upcycle, you're going to see accelerated revenue for both segments. So buy the dip opportunity, in my opinion, yes. But of course, that's just my opinion. Do share yours down in the comment section below. Like, subscribe, do all of that, and I see you all in the next one. Bye-bye.